Alrighty. We are live. Yes, we are. Waiting for some people to join the TikTok live. Okay, so I took a loss today. Today I went in with the bullish bias because of this 4-hour breaker block I marked last night. And this is exactly why I don't come in and mark off shit thinking the market's going to do something before I get on the charts. This is exactly why. Prime example, I went in with the bias, didn't even look at what was clearly in front of me. Boom. Okay, today was shitty price action in general, so a lot of people lost. But I marked out this 4-hour breaker on the 4-hour chart. That's what I marked. So I was hoping we came out of the breaker and took out the Asian highs. We had a nice sweep here, but we didn't sweep anything for this move here, so it really wasn't a thing. And then I got on the 3-minute chart too early, and once we were trading upwards very shittily, as you can see, and then we finally inversed this, and that was my confirmation, like a break of structure to the upside, and it reversed immediately, kind of like it was doing all day. So I immediately got stopped out. But the real trade was the 1 hour. We just came up into a fair value gap, and you still could have took a nice trade. We came up into this hourly fair value gap, and we reversed and took out sell side liquidity. That was the trade of the day. Yes, it's Monday, so technically you could have just not traded today if that's what you wanted. This was the trade of the day. A nice 1 to 4 still. I know some people took it on the 1 minute. This guy, he gets a trade every fucking day, y'all. Like, he trades. Like, I was like, dude, how the fuck are you catching these trades? He really trades like 1 minute to 1 minute, but I asked him, he said he trades 4 hour, 1 hour, he does top down analysis and then gets in these trades. This was the trade at 12, obviously after the hourly gap. So I'm kind of scrapping the 4-hour chart, and today we're going to talk about weekly profiles, just looking at the chart in a weekly standpoint, because we can break it down. I have my chart. These breaks won't even show up on the 4-hour chart, so that's why we can't do it. But as you see, this is Monday of last week. Monday of last week, we came into a Friday breaker. That was the trade. So for people, a lot of us were looking for buys this day. We took a loss. Monday is just, not the worst day to trade, not the best day to trade. But we did come into this 1 hour fair value gap, took sells down. Some people took them off an inverted fair value gap. Boom. Monday made these bearish fair value gaps, and then we came up and swept Monday sell side on Tuesday and reverse. Boom. Great trade. To what London Asian lows, I took this trade. And then on this day, we just did a regular liquidity sweep of Asian and London. Came down to this PM session low. Now, news took out the high of day, whatever, and then we ran up on Thursday. And then Thursday, we did a regular again, just swept liquidity and ran down to this London low. That was it. And then today, we came into this, we traded sideways, but we came into this gap to check out this sell side liquidity here and here. And it was the London high too. So I wasn't confident in my buy because this was the London high. I was given liquidity sweep run down, but like I said, I went in with the bias off of the bearish breaker, and you don't need to do that. So this is what I'm gonna backtest today, and we can just go back on TradingView, and I can turn off the sessions indicator, and we can just do it that way. And I did an example on FX Replay as well. But if you look at the weekly, if you get on the chart and look at like the days of the week, it helps you so much. So this is the week I got funded. So we have Thursday, Friday, Monday. Okay, Monday we came into this gap here, boom, and then we reversed from it. I took that sell trade. We did the same thing all week, and then Tuesday we did the same thing. We came into this gap. We came into this gap here, and then we took sales, and then we came back up. Boom. And then Wednesday, we swept buy side. I also took this trade. We kind of did the same thing every day. And we ran down to take these lows down here. Beautiful. And then the PM session ran up after we took this down. Boom. And then, obviously, Wednesday we ran up. Thursday we came into this hourly gap, and then we pushed up. And then Friday we just had this nasty power of 3 where we swept liquidity and then ran up. So if you look at the week like this, it'll be easier for you to tell where it's going. I tried to see if I really could just trade liquidity to liquidity, because that's what Louis YT does. Like his trade today was this shitty ass inverse fair value gap, but he has like 100% win rate. This one here, this was his trade off the 1 minute. Dodgy GD didn't take a trade today, and a lot of other gurus did not, but that was his trade. Or maybe he had a tighter stop loss for 1 to 2. But it's like, who's taking these? I personally, like, I get it that you can easily scale these and cash them, but in this price action, you're just taking every one. Like, there's one here, but this is the one we wanted. The noon to the sell side here. This is the bigger one. This is the one we wanted from the hourly. The hourly gave us this one. This is just choppy bullshit, but how do you catch that? But again, everyone is different. So yeah, all you gotta do is get this session day breaks. You need something to midnight, because then you can see it a little better, a little cleaner. All right, let's look at this week. We have Monday, Tuesday, Wednesday, Thursday, Friday. Actually, this is the one we just did. That's the one we just did. Let's do the week before. We just did that one. Okay. Monday is a choppy day. This is the day we probably wouldn't have traded on this Monday. It's not much. Especially because 9:30 and 10 o'clock is here. So, yeah, we ran up to these highs barely. Not even. We didn't really take them out. So this Monday we just would have known, because it's the hourly chart. This is not like a 15-minute chart, not to trade. Unless you got in at 3 a.m., you took that, boom. But on Tuesday, since we traded so shitty on Monday, you kind of know we're going to do a big run. That means like tomorrow. Like basically tomorrow we should have a big run somewhere. Tuesday we came up in here at 3 a.m. 9 o'clock is here, 10 a.m. I took this trade, took it down to this low, right at 10 o'clock. Boom. Great trade. And then that following Wednesday, the trade this day was we were down and then we went up to this. This was our trade. We were down, we went up to this gap. Boom. Then on Thursday, Tuesday, Wednesday, Thursday, we came up into this gap. So see, if you look at it, spread it out, like weekly, daily, like the day before, you'll go into something from the previous day. And we swept the daily high. So you love when you take a liquidity sweep into a gap, the trade down. I think I took the trade down. Yes, because this was S&T. I wanted to hold to these equal lows down here. I remember someone in my chat, I traded this live, was like, I want these equal lows. And they didn't get them, but it was S&T. And there was a bunch of liquidity points on the 15-minute you could have took. Boom. And then that Friday, we came up. We had a nice little power of 3. We came up, swept. I got in right at 10 o'clock and took it down to, I marked a liquidity point, yeah. I marked out this one and this one and this one. I took it to the first one. And then, and then the next week, boom, we are back into the gap from the previous week. You see what I'm saying? So this is how I'm going to try to trade for the rest of the week. I want to see if we can backtest this too. Let's go back one more week because I'm a little scared to backtest it. But you got to practice really guessing it. Anyone can just go back and look at it in hindsight. All right, Monday. Monday we fell to take out this liquidity. So basically with this too, it should be easy because one, this is an hour chart. You'll just see if we just start moving down, you'll see it. And you won't miss out. Like, yeah, it looks crazy. This is a whole hour. Even if you waited a whole hour and got in at 10 o'clock, boom. You know what I'm saying? Or you'll go on the 1 minute once you see us finally go down a little bit and see if you get like a market structure shift or something. You know what I'm saying? Or change in state delivery or fair value gap tap or whatever. Jasmine going to 10 cents. I only trade futures. I don't trade stocks. But yes, if that's what you think. TikTok tick tom toe. What is the monkey over the ears sound emoji for? Okay, and then on Tuesday, we get up into this fair value gap. And then this was the day we took this trade as well. We went up into that fair value gap. That was the trade. Because see, this is 9 o'clock. So you see where 9 o'clock is, and you just see where we're going. And then this day, we were already up into that gap, and then we tanked and went down to another gap here, which also lines up with a breaker and a gap. I don't really like breakers, but I've noticed that if you need a target really for sell side or like a target to take profit, the breaker is usually the better target than the top of the fair value gap if you wanted it. So then the next day, we were already up here. I marked this trade, but the drop didn't happen until 2 o'clock, so I didn't take this trade. But we came back up into this gap, and then we reversed down into one of these gaps. Boom. Next day, we came up into this gap at 10 o'clock, and then we came down. Boom. See what I'm saying? So you just look at where the chart is and where it's going from a weekly standpoint, and you really can break off where the charts are going. Now you can study weekly profiles, but it's hard to remember each one. Like today was like a consolidation daily profile, but it didn't matter. You could have traded it off the 1 hour. So I already did a week on FX Replay, and then we'll try to do this next week, playing it out in real time. But so on this week, this was Christmas week, so it jumps from Friday to Tuesday. Respectfully, Frank, yes, you put me on for sure. Also, I would have seen that anyway. Today, I went in with the daily bias, which I don't do. I traded a 4-hour breaker, which I don't trade. And I went in with the bias, and I keep telling y'all that. Don't go in with the bias. People love to say, go in with the bias, go in with the bias. Don't, because I didn't even look at the clear sells we had today. Anyways, so Thursday, we clearly ran down. So Friday, we traded up into the gap, and then ran down to this gap. So you could, whatever your take profit was, it probably is a liquidity point on a lower time frame. Boom. Then we ran down on Tuesday to sweep out Friday's lows. And then Wednesday was just a regular PO3, accumulation, manipulation, distribution to a liquidity point that just scroll back, find the first one. It came to another one, second one if you wanted it, but that's it. Hi, how are you? Love to hate. And then on the next day, we started downward, and where are we going to this fair value gap from Tuesday? This is Thursday. You see what I'm saying? Just get on the chart, and you'll see, like, if you look, zoom out, because that's also my problem. Even on the 1 minute, I am so zoomed in. Even this morning, my chart looked like this. Just zoomed in to all three. Like, girl, relax. Zoom out. Then we took this trade to here, and then on this Friday, we were already down at the breaker. You could have took the trade up. This was kind of an all-day trade, unless, yeah, this kind of was a whole day thing, unless you just wanted to take it. This is 3 o'clock, so hopefully 3 o'clock to like almost 4. It took out this sell side. If you waited all day till 4, yeah, it went up to here. So it was just a day where you took it, maybe this swing high took out some kind of internal liquidity in a lower time frame. Again, this is the hour time frame. Boom. Then that Tuesday, January 3rd, we came up, swept the London high in this fair value gap. Boom. And then we ran down to take out the low from the previous day. Boom. Again, your days are midnight to midnight, not the 6 to 6 from regular trading hours. For ICT trading, you see how it looks better when you mark, midnight to midnight. And then on this day, we came down to the breaker again and ran up. This is a regular little CRT for those people who swear by it. We got a range, we came down, and the third candle took out the high, and then the London high, which also landed up in this beautiful gap right here. You see what I'm saying? Like, you really can just zoom out, and it really gives you your draw on liquidity. And then same thing, we pop back up, on this Thursday, and then we ran down. We traded sideways this day, so there wasn't much we could have done unless you. This is 10. This is 9, 10. So maybe we would have gotten in somewhere in here, and then maybe took it down to this liquidity point, or we just wouldn't have traded this Thursday. I cannot tell on this higher time frame, but 8 o'clock, 9. Maybe you got in right at 9:30. You took it down. We'll see. And then this day we swept the low from Wednesday of last week, and then we ran up to take out the high from the previous day. You see what I'm saying? So if you zoom out, okay, now let's see if we could do this in real time. That's always the hard part. That's literally always the hard part. Okay, this is a liquidity for now. This is another day as well, actually. We just ran up, especially because we did inverse this gap now. So we just ran up to the heavens. And you can actually leave all your drawings on. That's a good part about this, because you leave them on because you'll see where we're going. Each day it respects a drawing. So this is midnight of this day. Let's just mark all the days out. Next day. Next day. So we'll just see how it goes tomorrow. And let's play it out. I do hate days like this where it just runs up, and now we have to like see how far back, like what the draw, what fair value gap is going to be on the first. I think I already played 9, 10. Yeah, we ran up this day, so let's just go to next New York session actually. All right, see, boom. We saw this inverted gap. You do stocks? No, just futures. I just do futures. I'm focusing on one thing, which is very good for beginners. I know when we all start option trading, everyone's telling us to trade a bunch of shit, but it's better to just do one. We ran up on this Monday. We would have caught this trade off this inverted, or the liquidity sweep back down to the gap. So now, let's see what happens. We probably we could go lower, we could go down, but you'll play it out and you'll just see it in real time. Boom. This is 9 o'clock. We would have caught this. Maybe it's going to bounce up one of these gaps up here. Boom. Like I called. So that trading day would have been trading up to this. Oh, we didn't even hit that gap. We hit the first one. We hit this one. And we can go down to lower time frames now and see what that would look like for us. So 9:30 traders, nice run up to that gap. 10 a.m. traders, which is usually when I get on. I got on at 9:45 today. Maybe we play the 10 a.m. reversal. Let's see how that plays out. Did we take liquidity? We did. We took this liquidity. So yeah, the 10 a.m. reversal was good, or 9:30, just getting in right at 9:30, taking it up to this gap. That's what we got. Or 10 o'clock, wait for the gap, wait for the reversal. Obviously, the 10 a.m. reversal is a lot better. We got an inverted value gap here. Boom. The trade would look like to this swing low down here for a 1 to 2. Nice trade. I probably should do this and look at don't wait, you will miss the move. What do you mean don't wait? 10 o'clock is a better move than the 9:30 in my opinion, most of the time. Short on the high, buy on the low. Well, I don't trade that way. This is the ICT live, so there's a method to the madness. Okay, back on the hour. So like I said, we called it. We had this gap up here. We came into the gap. We played the reversal down. Beautiful. If you're a 9:30 trader, you probably played up to the gap, but 10 a.m. trader, myself, we played, the sweep of 9 o'clock down. Good day to trade. Now let's go to the next New York session. And it's looking like our draw is up here. So I'm sure we're just going to take it out. But let's see how that plays out. Boom. Draw taken. Now, 9 o'clock, 10 o'clock. Again, 10 o'clock trader. So, go on the 1 minute. Your draw, the 1 hour will paint the good draw for you. Let's see what 9:30 gave y'all. Okay, 9:30 gave a great trade, actually. We got a little, I thought we'd have an inverse fair value gap, but we don't. But you do have a market structure shift, a regular ICT market structure shift. Came back into this fair value gap right here for your entry. That's the one if you trade regular OTE. That's your strategy. I would probably play the 10 a.m. reversal. So let's see if we get one. We do have a fair value gap here that is just inversed. So that trade would look like this. And I keep telling people this. People love to get on this and just start marking up fake orders that they would take and, see how much money they make. But really just study the chart and replay. Like, you don't have to just sit here and take orders. Like, really look at if you would be right or wrong. And I'd be stopped out here. Boom. So the 9:30 trade wound up being better, even though we still took out all this liquidity. So that was just me being a little greedy. And that's fine. I would like it to run back down, but it's still a nice 10 a.m. reversal if you wanted it. How did we get that? From the hourly chart. And this is when you just look at it day to day. So we did keep running up. This could have been a day to play a continuation, like maybe you waited for it to come down to a gap if you had a bias, and then play it back up. I would have just probably played the reversal and gone about my day, or I might have played a continuation. I've been playing a lot of continuations lately. Because I wanted to continue up, there had to be a gap it tapped into for me to take a buy from. So yeah, like that. I would have waited for it to come down to this gap. Or knowing myself, I would have took the trade down and then back up. Big sells for me, caught the buy earlier. This isn't today. We're just back testing. This is not today by any means. But good for you. So yeah, boom, boom. Now this trade you could have took to the top liquidity, but and if so, like say you took this trade, that would not have been a loss. You would have literally closed your trade once you saw it move back up. You would not, unless you set and forget. Even if you set and forget though, you'll be watching it and being like, oh, okay, well, we starting to reverse. Let me get out my trade. Like, you're not really gonna let that go back to a loss, but you might. Some people might. Okay, we are back up here. We need to zoom out to see where we went, where our next target is. That's the only thing. When we're in like running up, and we've already, there is a fair value gap here. Let's see how the next day reacts. But see, you'll zoom out and you'll see, like I said, we bounced off this gap. Boom. That was our trade that day. Today we've came up. And honestly, I should have marked for buys this fair value gap. That's probably, I should have marked that actually. Let's go back in 1 minute to see that. Boom. See, that lines up with the buy trade. So we inverse that gap. I mean, 10 o'clock. Yeah, I probably would have took the buy because I trade at 10. I don't have any patience. I'm going to be honest. I'm not going to wait. If I see something right at 10 o'clock, I'll just take it, whether it's the bigger trade of the day or not. That's a me thing. But see, the 9:30 traders, their entry was way up here. 10 a.m. gave us a better entry, and then that would have been the trade I took. As soon as we closed back out of this gap, because we inversed it, and then took it to that drawn liquidity. Not the best. This trade obviously is bigger, but that's some shit I probably would have taken. I probably would have took, realistically. realistically. So I want to see how we react tomorrow, honestly. Okay, these are our draws. Let's go to the next New York session because again, you don't trade overnight. See, you don't. Asian in London. Well, this is the rest of the day, the PM session. I don't trade PM session either. So I don't trade PM session, and then boom, look at this. At news, and that's why people are like, oh, you shouldn't trade news, you shouldn't trade news. News is going to do whatever the market's going to do, just with higher volatility. So yes, it came down, tapped back into this gap, pushed up. So it's giving, we want to inverse this gap. Ooh, the next liquidity point though is here, and there is a giant gap here. So maybe we'll just fill this gap a little bit. I hate when higher time frame gaps are close together like this because you just don't know which one's going to be taken seriously. It's usually the second one, but... Or maybe we wait for it to come up in here and bounce back out and fill some of these gaps again. But this wick is showing me something, but that's why you let it play out a little bit. Okay, this is what, 9 o'clock? Okay, yeah. So at this point, you'd be in this. You would have gone down to the 1 minute. Where's 9:30? Yeah, you gotta market structure shift here. Boom, and it does come back. It comes down. It comes back in and tap you in if that's the trade you wanted. Let's see where your target would be. I don't think we're going to the data low, but we might. Some people do data low. I'd take my trade just the top of the fair value gap or the middle of the fair value gap. Like that. It didn't take the data low, but that is a trade you can get at 9:30. And I think you can get back on at 9:30. Like, obviously, I like to trade at 10 o'clock, but I might get back on 9:30 now that I'm sitting on the 1 hour, so I'm not getting faked out. Like, I'm letting 10, 5, 6 minutes go by unless it's super clear that we're running down like this and then taking it instead of getting, like, faked out by some 9:30 fake outs. But this is a prime example of data high taking data low. Some people trade that. But yeah, using the 1 hour weekly, like I said, we drew that gap out and we bounced off of it beautifully. And we did bounce off of the top one. Like I called the top one, and then you saw us start to reject. And then you would have gone in somewhere off here. We didn't go to the data low, but we took it down to this gap that we have marked already. That's why the good part about looking at it on a weekly standpoint, these gaps are already marked for you. And even here in London, we came out of the same gap and bounced up. We inversed this gap. We went and took it to this liquidity. Could have held it for longer, as you see. And then here, we bounced off this gap on a higher time frame, ran down. I fuck with your content for real. Thank you so much. Yeah, I'm trying to make content for a beginner and also just for myself. I'm a beginner myself, even though I'm profitable and stuff. Like, sometimes trading gets very emotional, and I'm trying to find the holy grail that we can do that's just easy for us beginners to just look at and like know where their chart is going. I haven't technically found it. That's why we backtest every day. But I do like this. I could say. I was trying to see if just the silver bullet works, and it will work, and things will work for like 10 days, but then they won't for like 30 days in a row. Futures, not forex. All right, midnight. I didn't mark midnight there. Okay, so boom, here we are. It's looking like we do have a gap here, and we have a gap up here. Let's just mark this gap. And there's a breaker. I know, y'all, I hate breakers too. I fucking do. I really do. But I've been seeing people use them nicely. So maybe let's see if we come up to this breaker and then go lower to take out some sell side liquidity. Even the liquidity from yesterday, which was, down here. But me, I don't like to get greedy. If we come up here, this is a good target. Let's see how it plays out. All right. We have come up a little bit, and we're starting to push down now. I think we can go on a lower time frame because there is still a gap here, and it's looking like we are making a wick. We can keep playing it out though a little bit because it might go up like that. Like sometimes you have to just sit and be patient. Okay, so 9 o'clock, 10 o'clock. 10 o'clock immediately started to continue. It inversed this gap. You need to go on a lower time frame now because this could be the next target, and you're already halfway there. So go on the 1 minute. Do we get something nice? We did invert this one. This is a candle. This is our breaker. You could YOLO it and see if you get in the trade to this line, which is the London highs, or you can see if we reverse out of here. You can be safe. For me, I don't know. Sometimes I get scared when there's two higher time frames. Sometimes they ping pong in between each other, and it pisses me off. But let's see. Boom. Scared money don't make money. Should have gotten the trade. Oh well. You live and you learn. But if you weren't scared, you got in on this candle close here, took it to here, stop loss, I don't know, wherever you wanted it, below the body. Decent trade. So that's what I'm saying. You sit on the higher time frame, and that's how you're gonna get your fake outs out of here. That's how I got mine out of here to get funded. Because if y'all were watching me trade live, I always took like a trade loss and then made my money back, and then some, which just pissed me off because I just want my big ass gain. You know what I'm saying? But if you sit on the higher time frame long enough, like this, boom, you'll get it. And or I also learned that, cause I know some of us, me included, I do play continuations now, but I usually prefer just play reversals. You know what I'm saying? A lot of us do. And you can just wait. Like, see how we continued? You maybe wait and see if we reverse off of this liquidity point. Yeah, you might be on the charts a little longer, but let's see if it does it for you. You know, for me, you know me, I just get in and I like to be done. So whatever happens at 9:30, you got a good trade actually. But I would have still waited for us to inverse this gap. So maybe get in at 9:45 or whatever, which is what I'm trying to do now. You would get a better trade, a little more room. Is this 950? Yeah, 950, good trade. And it tapped you in on this gap if you wanted it. So you could have waited for just the fair value gap tap. So many options. Now let's see if you get a reversal from this liquidity point for the reversal people. I just stopped. I mean, it's not the best, but it's a decent move down to this low if you wanted it. I don't think we're going to continue lower than that though. I just noticed some days lately we've been just continuing at 10 o'clock. We've been just running up the hills like this. But that's still not a bad move. You just have to be mindful. Like you take a trade against the trend, you need to, you know, sell something. Do a little something. But usually at a liquidity point it's gonna pull back a little bit. That's just regular price action. But a lot of us would have just, you know, gotten in this trade. We inverse this gap, take it. But I've inversed a gap like this, and then this one, it reversed on me. Yeah, and it made me mad. But there was London highs up here. You know, there was other confluences for that. You know what I'm saying? So that's how you do it. So I mean, y'all should try this. I'm gonna try it. We're not doing too bad. And I'm gonna keep backtesting this. I think this is my final. I keep saying final, but we just keep learning in trading. Trading is just a learning. You're always fucking learning. My final way to trade, I guess. I hope y'all we can see this draw in liquidity. If not, at least you can wait. Like you can get on at 9:30 and wait for this to start being a fat ass red candle, and then get in somewhere and take it down on the 1 minute. Boom. And then here we saw it start to go up. Even up here we saw it go up. We got in somewhere after this yellow line if we were being safe. You know what I'm saying? Like you can catch the move. You just gotta catch some of the move. You don't gotta catch all of it. So at least if you're wrong in your bias, you'll start seeing these big ass candles and try to get one more. That's all you really need. This one played you, of course. But if you wanted the reversal, you got it. But at least usually you get one big candle, you should get one more. Like here, one big candle, one more. You know, usually you can get one big candle, you get a few more. You know what I'm saying? A higher time frame would be nice. But if not, just be ready to exit. It doesn't matter. $10, $2 is better than a loss. All right, next. Always good next New York session because, again, we don't be trading overnight. Some people do, but I don't. So it's like, all right, we're still in this fucking gap. We might finally inverse it. Again, this came down to a what? Breaker. So I'm saying, like, if there's not a gap it tapped into, you can see. And then you can do this, too, on the hourly chart because the 9:30 open is just doing its thing while you're doing your analysis like this. And then eventually 9:30 will happen, and you'll see something. You know what I'm saying? Because sometimes 9:30 is shitty price action at the beginning, and you don't want to be looking at the chart for that. All right, we are in a breaker if we do want to go down. We did invert this big red gap here, but we also have so many gaps up in here. that I'm like, let's just see how this plays out. Like it could come up into this gap. It could be already wanting to stay in this gap here, which I don't like, and then we already inverted this big ass gap here. So let's just see. And that's the good part about being on the 1 hour chart. You can just play some shit out first. All right. That's still not helping me. We do have a nice wick up here, but it's a green candle with a wick up the top. All right, now we're starting to push down a little bit. I think we can go on the 1 minute. What pair are you looking at? NASDAQ futures. So NQ, NAS 30, US 30, NAS 100. I think they're all the same. US 30 moves a little different. Alrighty, we now have a market structure shift. Boom. And then we did inverse this 5 minute gap. Boom. So technically your candle, your position could be here if you want it. Stop loss above. Don't piss me off. Stop loss above here. Let's see, there's a liquidity point we could target. Or you can just do a 1 to 2 if you're feeling safe. But I think 1 to 2 lines up with our target. But we can go here. You can go to, there's so much liquidity right here. You can do like the middle of the gap. You can do the breaker. Let's see if we get it. Let's see if we push out of this gap down to the downside. Boom. It didn't stop us out yet, but it did take just these equal highs and bounce off this gap. Let's see. Oh, it didn't stop us out. It didn't stop us out. That's why you don't move stop loss to break even as ICT traders. It did not stop us out. It gave you your full take profit. So, great trade. Great trade. So yeah, I think this is how I'm trying to trade for real. I was trying to sit on the 1 minute and do the zigzag, but it doesn't happen because some days like this, there's real moves to be had in the day, and you just can catch the one big move of the day. Like I said, just sit. Like I said, sit on the 1 hour. I think I'm about to go back to the 1 hour and the 1 minute because now that I have a bias of where it's going, and look, we came up into this gap. We reversed. Took it to here. You might can take it to here. There's a gap here. That's probably where it's gonna go to. But like I said, I don't get greedy. I can take a 1 to 2, but just with a higher time frame bias. And let's see if it actually does when I'm going down to that gap. It might not today, but boom. See? Easy peasy. That's also an Asian session. But you see what I'm saying? Like the markets just move to gaps and liquidity. That's it. That's all you need. And looking, like I said, on the hour, and that's the good part about this, on a weekly basis, you can leave your drawings up here. That is the best part. Because like, look at it here. It almost bounced into this gap, but off the breaker. And then you'll leave this, and we bounced off this gap for 2 days in a row. I didn't mark the new day, actually. 2 days in a row. Boom. Up in this gap. Took the trade up. What is this random ass time? And then this day we took it down. And that's how we do it. That's it. So it's kind of worked out. For those who trade every day, I don't know where we're going from here. But actually, I want to do a 2 chart. I want a 2 chart. And I want this to be the 1 minute now. And I need to stay off of it until I'm ready to trade. That's the hard part. So let's see. We might go down in here. We might go up to these Asian highs. I'm trying to see if we have any breakers. We're kind of in this 4 hour, it's like 1 hour breaker, but we'll just see. We'll see what Asian and London does. That really will tell you what happens the next day. You know, what Asian and London do. Maybe it'll be a simple power of 3 like this. Maybe it'll be a nice something. We made no gaps today, but it was terrible price action today, but there still was a trade. As you can see, there's always something, and that's what it is. Just look at it, zoom out, look at it on a weekly basis, and mark things and leave them for the week. And you can even leave them forever. Look at that. We just did like 3 weeks, and all the drawings are still left on there because the market played off of them multiple times. Like we came up of this gap and then inverted this gap that we tapped in it. No, NQ futures, not gold. Gold has been that girl though. I've heard gold has been treating everybody nice. NQ has been a little moody, but no, not gold. NQ futures. But yeah, this is it, y'all. Just zoom out. At least a few 2 or 3 days behind, unless obviously you're in an uptrend after being in a downtrend for forever, and then you have to zoom out obviously, because that's just what it is. Okay, hell for real. Today was a good day in gold. Yeah, today was a great day in gold. It was not a good day in NQ at all. A lot of people lost or didn't take trades, which I shouldn't have took a trade. But yeah, see how you can just catch a move. Like I said, a liquidity to liquidity. Our trade was tiny, but there was another one here in the afternoon, a swing high to a low in Asian session if you wanted it, and just zoom out. Look at your hourly chart like you would do your 15-minute chart, and that really has helped. Like, how on the 15-minute chart I'm on, you see like, a bunch of price action. Like, this is like 2 hours or whatever, but you do it on the daily. Look back like 2-3 days, and then you can keep your shit on all week, which is the best part, because it comes down, and bounces off gaps and retests gaps that you already have marked, or like that's your target, and it's just so nice. We're gonna keep backtesting this the rest of the year, hopefully. This is just how we backtest. This is how we get our daily bias. And then you can wait for the candle, like we saw this wick, and then we saw the next candle be red. We wait for it to start moving in our direction, and then we got in a trade. And even going to 1 minute, look how accurate our trade was before that candle even closed. Beautiful, beautiful, beautiful. That's it. And that's it, y'all. Like, I feel like it sucks because weekly profiles technically is advanced ICT. Technically, I know. I was trying to find an easy way for us to trade, and I don't think there is one. You have to but I think this is the easiest. Sit on the 1 hour, mark it out like you would a 15-minute chart. Zoom out a few days, and I think you'll be better traders. And/or if you don't know where it's going, wait for this 9 a.m. candle to start moving. As soon as it starts moving green, go on the 1 minute and see if you get a buy. As soon as this shit start moving green or red, what did we get? Yeah, we came up here, this shit start moving red, out of the gap, start looking for sales. You know what I'm saying? Like, even if you don't fucking know what the day is going, sit on the 1 hour chart and wait for these candles to start moving. That will help you tremendously. Obviously, here we knew to wait for one more candle a little bit because these are 15-minute gaps, hourly gaps, which you would see even if you weren't zoomed out. You would just see these 2 gaps up here. And this was how you were zoomed in, because that's how I be on my chart. But now I'm realizing if I zoom out, where's our target? Boom. I mean, this was a London fair value gap, so you could have traded this without any reverse bias, but you know what I'm saying? That's all you need. And we'll keep backtesting this every night, 8 o'clock. I do this, and I'm going to see how it goes tomorrow. We don't have anything for tomorrow, though. I wish we did. But, again, London and Asian will show you, and then in the morning, we'll see, like, this happened before I got on the charts. And then it told me, oh, come back to this gap and play it down. You know what I'm saying? So that's all you need. But, yeah, I'll see y'all tomorrow night, 8 o'clock. We'll keep doing this. I hope this helped. Looking at it the week. There are YouTube videos on weekly profiles, but again, they're more like remembering like set ones, which I always I don't really like focusing on set profiles, because then when it doesn't happen, you're like, fuck. Like, obviously this is a regular AMD, NY reversal, but what is this? This is fucking, what is this profile today? Nothing, useless, helped us none, 0. So if you're just stuck on, Johnny called this the London zigzag, I guess. So I don't know what the fuck that means. But, like some profiles you can see, but at the same time, just trade what you see. Like, just wait for this candle. Don't wait for this candle to start moving down here, boom, then play sells. You can even wait for sell-offs if you want. Wait for this white candle to start going down, boom, play for sells. Wait for this candle to start going up, play buys. You know what I'm saying? Today we were Chop City, but once we got these wicks out of this gap, sells. Didn't wait for that. But yeah, I'll see y'all tomorrow. We'll keep backtesting this and doing the same things and getting better. Backtesting will dramatically increase your profitability. If I would have been backtesting sooner, I would have been funded way sooner. Even though I got funded very fast, I would have been funded way sooner if I was backtesting like this when I first started trading. But so yeah, see y'all tomorrow. What indicators do you use to mark zones? Sorry, Yariel. ICT sessions indicator for zones. I forgot to have my YouTube chat on today. So yes, in the ICT sessions indicator for zones, and that's really it. That's all you really need. Hope you're still alive. If you're not, maybe I can message you later. But yeah, ICT sessions. I think I can go to your channel and message you. Sorry, I don't have to put your YouTube on blast. I'm still live streaming. But yeah, ICT sessions.